Yeah. All right. Well, that is this week's video. He went over the buy and sell model. I think he actually just went over the sell model. So the buy model is just reverse. And so on these, the left side of the chart of this little graphic on the side, original consolidation, it always starts from the original consolidation. Everything starts that way, okay? Then you have a distribution leg. There should be, it's just basically the sell side, okay? But you can have a distribution side, you can have one or multiple, okay? And then eventually you want to get into a higher time frame discount array for this model. And it's very important because when I look at these, I don't really trade it the same way he does, but kind of do, I guess. I don't know. I look for a higher time frame PD array, like maybe I'm targeting a fair value gap on the 1 hour chart, for example. That's my higher time frame discount array, and when it goes in there, that's as soon as it hits that discount array, that's when I'm dropping down to the 1 minute, and I'm seeing if marking up, is this original consolidation distribution? Do we get a smart money reversal? And that's when you start looking for your low risk buy, your first leg of accumulation, second leg of accumulation, reaccumulation rather, and then you're targeting. Okay. No, that's 2022 model. But I like to see it on a 5 minute chart. I want to make sure that there's a market structure shift on the 5 minute chart if I'm trading the 1 minute, because a lot of times on the 1 minute it'll drop down to that lower time frame. I'm sorry, higher time frame, like the 1 hour PD array on the 1 minute, and you'll think you'll have you'll have a 2022 model, you'll have your break of structure, but then it'll go down and take out that low again. Well, and then you look at the 5 minute, it didn't break that. As soon as it broke that 5 minute market structure shift, you were clearly then in the buy side of the model. And so I like to have just a little bit more confidence. I mean, you can do it on the 3 minute too, but I've taken quite a bit of losses on the 1 minute based on their market structure shift on this scenario because I didn't use the 5 minute for a confluence. So I hardly ever get in on low risk buy, and the only reason it's a low risk buy is because your stop loss is so tight. I mean, you're just going below the low there, so you're not really risking a whole lot. But if you do get in on that, and you ride it for the whole move, you're in for a huge payday. If you're willing to. Sorry. I rarely get in on that because I usually don't get in on it. I usually miss it. And to be honest, if you're waiting for the 5 minute market structure shift, most of the time, by that time, if you're on the 1 minute, you will miss the low risk buy. That's just I'm fine with that. There's there's a ton of ways to get in when you're on this side of the model, but I think next week I hope he goes over it. If not, I'm going to share from some of the other groups some images that I have from the other groups that show like first leg. There should be a turtle soup type entry for the first of accumulation. I'm going to show you some standard deviation projections when they should occur. I'm just kind of waiting to see if he actually goes over that next week or not. If not, I'm not sure of that. Yep, manipulation leg, and then go to 2.5 deviations, and then see where it lines up, and then you can also go to 4. But you need to be managing your stop loss long before it hits 2.5, because at 2.5 it will usually will retrace a little bit before it even goes to 4, if it's going to go to 4. Yeah, because sometimes it won't go up to that consolidation. It'll stop at 2.5 standard deviations, and then it'll stay for a while. Hmm. Yeah, yeah. It's not always a perfect V, right? It's not. It's so you know what I mean. The standard deviations, if you're on that side, you can expect it to go to 2.5, between 2 and 2.5. But at 2 to 2.5, there's gonna be some kind of reaction. It could either that reaction could be flying up to 4. It could be a retracement. It could consolidate there for hours and then go to 4. You know what I mean? It could just blow right past 2.5, 2 to 2.5. But there's usually some kind of reaction at 2 to 2.5 standard deviations, and you'll see that between 1 and 1.5, there's usually have the first leg accumulation, or you will have your silver bullet entry with a breaker block. Hold on just a second.
One of the things that I've noticed too, what Kraken's talking about with the standard deviations, when I've been pulling my standard deviation leg, I've also been pulling the trim base fib just to find some confluence with some history that I understand when pulling Fibonacci levels. And usually that 2 to 2.5 standard deviation matches up with the golden pocket expansion ratio. And then 4 standard deviations matches up with the 2168, which is like the which is a higher extension of that golden ratio. So it's a great confluence between the two. And I've just started pulling standard deviation rather than doing the trim base fib because I'm noticing they match up perfect. It's much easier to pull the just standard deviation of the manipulation leg rather than trying to figure out what the trim base fib is. But they match up. It's basically the same thing. They match up perfectly. But that 4 standard deviation is um, the higher extension of the trim base fib. So that's just like Kraken saying, whenever you hit that 2 to 2.5, manage your trade because there you're gonna have a reaction to it.
Hold on just a second.
Trim base fib, it's all Fibonacci levels. The standard deviation and Fibonacci, they're all the same thing. Just a different way of looking at things.
Sorry about that. Sell model. It's just the opposite of the buy model. Um,
One thing he did mention in his video
mhm.
to go along with the PDFs that you created, the accumulation and the distribution legs. Whenever you see those accumulation areas, keep in mind, folks, that it doesn't have to accumulate in a perfect box like that. It can pull back to the previous area of consolidation or the previous area of accumulation distribution. It won't be perfect boxes all the time.
No, they get ugly.
Yeah, it can be really ugly. And he even said in his video he prefers it to look like exactly what Kraken has produced here, but it doesn't mean it has to. He says it can pull back. If it pulls back to those previous areas, those legs, he doesn't want to see it pull back and then start dancing into that area. He wants to see a hard rejection out of it to have more confidence in it.
No, they're usually really ugly, to be perfectly honest. Sometimes you have some beautiful ones that are just like picture perfect. I'll try and find one for next week to show you a picture perfect one. And I'll show you one that's horrible. Um, but it's usually there, like in the other groups, the other 2 courses that I've taken, they have more about what you're looking for on the first leg, what you're looking for in the second leg, where it lines up with standard deviations, what PDRAs you're really looking for, what's the other side of the chart, like on the sell model. What should be happening on the buy side of the curve at the same time on the sell side of the curve. And so I'll be able to show you some more of that. But this week was basically kind of generic this stuff. So I wanted to make these for this week. No, what a lot of people do is they try and this is the breakout traders, right? As soon as it breaks out of that consolidation, they're buying, and on this one it's working. perfect. But yeah, I don't. I always trade the right side of the model. I hardly ever trade both ways. Well, that's not true. Every trade you're on one side or the other, right? But when I'm looking at market maker models and I spot a market maker model and I'm like, hey, I'm in a higher time frame PD array. Hey, there's my market structure shift. That would have been my low risk sell. I confirmed a market structure shift on the 5 minute. Okay, perfect. Now I'm looking for my first leg of distribution. I'm not trading at that point. I'm trading the sell side of the curve. I'm not. I may have taken trades in the buy side, but I wasn't thinking market maker model. Start of a market maker model on that side. Because you're not have, and the hard part is a lot of people will be like, well, isn't the original consolidation kind of the same thing as a smart money reversal? No. Smart money reversal is you went into a higher time frame PD array and you're rejecting from it. I don't want it to linger there for consolidation for an extended period of time. I'm not looking for that. I'm looking for it to get into that PD array, do what it's got to do, like hit consequent encroachment or be in there for a few minutes and then get the hell out. I want to see that rejection because I want to see that market structure shift, the displacement, the aggressive, move in the opposite direction. And that's what confirms on the higher time frame to drop down to the lower time frame to start looking for a market maker model. Does that make sense? Well, ICT has said his favorite, if he his one trade setup, not trade setup, his one model for life or whatever. Whenever he says if I was only going to trade one thing the rest of my life, the only thing I would ever trade, second leg of distribution. And what's that? That's your basically your OG silver bullet. That's what that is. Yeah. Yeah. So he's the second leg, and so you don't have to get in on the low risk sell. You're better off, in my opinion, waiting for that little bit, a little bit higher time frame market structure shift, like 5 minute. When you do that, you will most likely miss the low risk sell, but you will be before the first leg of distribution, and you can get it on the first leg or the second leg. And that just doesn't mean that there's only two entries to go short. There's multiple more than that. There's way more than that, but I've seen it where it's gone up, and you think it's a market structure shift on the 1 minute, and then you get taken out and then you get taken out, and then it becomes a market structure shift, and you go lower. So, the fake out sucks. So,
I do have some charts marked up from
okay.
his video this week. If you want me to share that, and we can discuss what you're seeing on these Kraken, because I'm not real. I mean, I'm very new to looking at the market maker models.
Yeah, go
But
for it.
but also, hindsight's so easy to talk about, right?
I know I like hindsight. It's the best way to backtest. Prove it. Prove that you see it first.
Does my chart look clear with the settings that I got?
Straight. Yes. Yep.
So I watched his video earlier in the week, and then I went back and watched it and decided to clear up some charts and mark up some things that came of interest to me. I don't know if they're truly market maker models, but they looked that way to me. They were dirty looking, but they looked that way to me. So I've got this dark box that I want that on the daily on regular NQ, not on the futures, but um, when we came down into this higher time PD array, so this big fair value gap and vector candle on NQ, right? We come down into that area after uh, what could be, and he even says on his video that the higher time frames, these could, your legs of the models can be just 1-2 candles, especially on daily, monthly, daily, weekly, 4 hour. So I was looking at this coming down to this area, and if we go to the 1 hour, looks a little bit cleaner. You can sort of see some consolidations back up into the previous area of consolidation before rejecting down. What became of interest was on October 27th on the 1 hour chart. he talked about, so this is the area we came down into, that higher time frame PD array, and something he talked about was SMT divergence between two tickers that are linked together, so like NQ and ES. What I noticed here was we had a mitigation type, higher low,
Mhm.
high, higher low before the breakout, to start this leg up. And what I noticed on ES on the same time frame, same day, same hour, we had the lower low.
Yep. SMT. Yeah.
Yeah, so that was and I'm trying to understand how the SMT diverged. I'm not using it. I'm just going back and looking at things and running tape on it. But to
Oh.
me, in this 1 hour chart, this started a buy model. You know, like
Um.
consolidation, expansion up, consolidation, and then the final leg, which we just ended this week to finish this whole move from that area.
I'm gonna drop a file in here. I'm just gonna find it for a second. This is what I've shared this before, I think. I don't know. It's not mine. It's from the Lumi Traders group. I know she won't care if I share this. But this is what I'm gonna just type it as market maker higher time frame to lower time frame. Yeah, let's check that. Okay, so this is what she talks about as far as if you go into a daily order block or fair value gap like you just went into,
Mm-hmm.
you want to look for the market maker model on the 15-minute. Because you should see more, should be easier to spot the different times. I usually don't like the higher time frame down because I don't trade the 15-minute. I trade the 1 minute. It's too slow. But that's the guide that I use on those. She went down and through and showed us in her group a monthly higher time frame down to a 4 hour, and then we did one from weekly to 1 hour. We did daily 15-minute, 4 hours, and it worked really well. So when I look at 1 hour higher time frame PDRAs, I'm going to 1 minute. If I see it's a PDRA on a 4 hour, I'm going to 5 minute. That's usually I haven't gone up any higher than that.
Oh, I closed it. I can put it back up. Yeah, I was just so I'm not saying that I would have entered on any of that on that 1 hour, but that I would think that if I go back and I see that happening, then as I'm trading intraday, I know I'm on the buy side of the curve,
Oh yeah.
so that I should be more biased to just look for longs after we come into lower time frame PD arrays in that move up.
Yeah, I bet if you went to the weekly on that, you'd see that you'd see the same thing. You'd be hitting a higher time frame PDRA, I'm betting, and then you'd see the 1 hour on that. It's just going to be easier to spot the different levels dropping down from daily to 15-minute than it is daily to 1 hour. You only have in the daily you only have 25 or 24 hours, right?
Right.
And the 15-minute you're going to have what is that? 4 times 20, so about 100 of them. 100 candles on the day, somewhere in there.
Mm-hmm.
96. So it should be in theory it should be easier to spot your different low risk buys, your total soup entry, your silver bullet entry. Um, you are always in one, and it may not be in the time frame that you're in. Just like this, okay? So like you're on a 1 hour market maker model right here.
Yes, sir.
That's in 1 hour. That is going to be that from where he's got that. Just look at that nice V from just right there. That's going to be probably 3 or 4 market maker models on the 1 minute. I mean, every big pullback is a market maker model on a smaller time frame. That's what's so crazy about it. If you go down far enough, it may not be on the 1 minute. On the 30 second, I'm sure that's even more. You know what I'm saying? So you're always in one of some sort. It's just got to pick your time frame that you like. It gets messy. That's no. I see that more as AMD type thing, Power 3 type of thing. That's what I say. You're in one all times, or you're consolidating. If you're consolidating, you're not really in one. But then they say like if it's consolidating on like the daily, for example, right? Well, it's consolidating on the daily. Well, the 1 hour it's not consolidating. Or 15 minutes it's not consolidating. It's moving quite a bit, you know. So I don't know. It's just something to keep checking for. But that's I didn't make that. Like I said, that's Girl Trader's diagram that she's back tested. And for me, the 1 hour and the 1 minute work really well. The 4 hour and the 5 minute work really well. I haven't gone up higher than that because I really don't care about the other ones, to be honest. Um, but I'm also a session liquidity trader too. So yeah, 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 yeah. But you're not going to trade the daily. Yeah, you're gonna always. It's gonna be very similar when you're in the. I mean, it's the whole thing. So when you want to see that on the 20, that right there, where you hit that green box down right there. So 27th, October 27th. Replay back from the 27th, and then let's just look at the different time frames. Yeah, replay from the time frame right there. Yeah, right. So we're in the daily PD array, right? So we're on the 4 hour. So then let's just drop down to the 4 minute, or sorry, 5 minute. Expand all that, and we'll start replaying candles and see what happens here. Yep. Yeah. Yeah. So just hit the play button. We're gonna look forward to see what happens. We're still going down more into that PD array. Pause it. Let me expand that because it's pretty small. There you go. All right. So you have market structure shift there, right? We have your that we just dipped into that. Now that's the end of the week though, so I hate that. But that'd be you would never buy that. That would technically be your low risk sell. Is that a wick? I can't tell if it's a wick in there or is that a gap? Okay, that'd be your low risk buy, but you'd never get in there because end of the day on Friday. So you're not gonna get into it on that one. So then this would be well, it's hard to tell. Yeah, yeah, true. It would be a good way to gamble on the gap up. Yeah. Yeah, well, yeah. So then let's just assume this. Let's play this out. If that wasn't a Sunday, that'd be your first expansion up. Next first layer of accumulation lag, right? In theory, that's what we're looking for. So now we're looking for, I'd like to see a spike down to take out liquidity and then go up. Don't think you really get it. Something like that, maybe. Yeah, I like that. I like that. To me in the first accumulation, I like to see a turtle soup type of entry, and that's where I like to see it like that. I like to see, yeah, I was expected to take out that one, but and then you're going to expand back up. And hold on, let's pull our manipulation leg here from that. Nope, down to the bottom one, right there, that to the right, that candle up to the high of that. That no, to the left. Swing high to the left. No, to the left. Swing high. Other one. Down. Down. That one right there. Yep. I guess you're right. You're okay. Yep. Yeah. There you go. Do you have a uh like 2.5 and stuff on there? You don't have that. Can I? How do I? Go from down there to there, and then just open up the fib settings, and we'll click on a few things. Nope, down to that. Just down to that first layer. That just where we had it originally. Down to that first. Okay. Yep. And then we'll just click on 2 and 2.5. You can do 1 and 1.5. That's fine, but that's 1.5. Those going to be, are they negative too? I think they're negative. Make them be negative. Reverse. There you go. No, I think you did it. Hold on. Just use it reverse. I think that should probably work in. Yeah, that's 1.
I got it pulled up on mine. If you want me to, I got it already pulled up. If it helps you out,
Okay.
Mark.
Well, you want that 1. Is that the from top? Put that down. Yeah, pull that down to the top right there. There you go. All right. So then we're looking. Then let's zoom out so we can see where the 4 is. Oh, we didn't put 4 in there. 4 is probably going to be at your New York AM. So add 4 on there. Just add 1 for 4. There you go. No. So 4 is right, kind of where that previous day high is, right there. So for me, for this one, I'd probably be looking for that 4. That's kind of where the original accumulation is. Mhm. All right, so we'll keep playing the chart, but that's how you pull that fib. I'll share my fib settings. I'll take a screenshot and show you and post those in here. So we have our lowest buy was the one at Friday. Then we just had our turtle soup entry, which is our first stage of accumulation. So now we're just expanding. So now we're looking for our silver bullet trade. OG silver bullet. Let me be clear. Yep, to the swing high. Basically, it's your market structure shift. That's how I always remember it. It's the market structure shift leg. And so now, hold on, I gotta say that clearly because sometimes your market structure shift is not your your lowest point. I take the lowest point to whatever that swing high that created that lowest point. Because some of them they have, a mitigation block is your lowest point, so it's not technically that one. So, and Mason knows of there's another way that he used to pull the one that was a retracement leg before, and I don't really get the retracement leg one, so I think it was Mason. Is that right, Mason? Am I right or wrong?
To get the standard deviation.
Yeah.
Yeah, I have it set in a just a fib retrace
Okay.
with just standard deviations.
Yeah, the AB leg of the breaker. Yeah, that's right. Yep. So this one we're gonna end up probably going to 4. It's hard with that week with the week break over the weekend because it kind of screws up things in my mind. So we just hit 4. Yeah, this is Monday. Yeah. You would have been somewhere in there. I mean, you have several entries that could have been a market a model here. Let's see. Where's 9 o'clock? Where's 10 o'clock? Oh, we're at 9 o'clock. Hold on a minute. What day are we at? October. So we got to
October
go.
the 30th.
You got to go to -4 on your time because it's before daylight savings time. Always screws me up. So I got to go what, -6, -4? Yeah, -4. Is it -4? Yeah. So 10 o'clock is now. Is that right? Hmm. Did it change when you went to -4 or 5? Did it change? Because it was 9. It was 9 o'clock there already. It didn't change. Chart. Okay. Well, so I'm thinking that 9 o'clock is the 10 o'clock silver bullet hour, and so you have. Reset 9:30. What's 8:30? Nothing. All right. All right, and that's that. So was the 9:30 open? No silver bullet, at least not for this model. In this model, but actually, you have an entry right there in the fair value gap. But that's how you do that model. See how we went from the higher time frame, drop down to the 5 minute from the 4 hour. Yeah, you got one right there. Right there's a fair value gap and a gap right in there. You can take that with it. Pick out some lows there. Down. Down an inch right there. Is that swing low there took out a couple lows down there for last, 3-4 hours. Then you have a little market structure shift there, sort of. You have a thing there. It's that's yeah, right. Well, that's why if you're in a market maker model, you can see the bigger moves play out if you're looking at it from higher time frame down. That's why it's hard I just trade 10 to 11. Well, I can't. I got to trade more because there's other things going on. Didn't quite. No. Anyone have any questions? That was pretty good. That was a pretty good one right there. And it played out for the whole day, or at least all morning. Nope, nope. I'm trailing it really tight after 2.5. I'm not giving up much. I will give up profit to make sure I save my trailing drawdown.
Partials pay 100% of the time.
100% of the time. We talked about that last week, and it was,
That's what my whole week was this week. Was was TP one for one contract, move stop loss up, pretty aggressive for second contract, and getting stopped out. I never got to my second take profit on any trades this week.
yeah, and you're still green this week, right?
Still green.
See, that's all that really matters at the end of the day. Yeah, that'll be your low. That'll be your lowest low. Yeah,
Yeah, it's the same thing you did, Mark.
yeah. What's your entry trigger? Usually a fair value gap. The turtle soup's a little different, but it's 2022 model for the smart money reversal. You've given just fair value gaps. Uh, order blocks. Yeah. Yeah, I turtle soups are the way that there's two different versions, I think, of turtle soups. There's ones where you have a swing low, and as soon as it goes below that swing low, takes that swing low out. There's people that buy right there. To me, that's gambling. Unless it's a higher time frame PD ray, you're really, even then, you don't know if it's going to blow right through that or not. We never know. That's why I always say, hey, when it goes in that, like for market maker model, and it goes into that higher time frame PD ray, I want to see it hit that, go into it a little bit, and I want to see a strong rejection from that level, and then I'm dropping down. Because if there's no rejection up there, I can't tell you it's going to reverse. And if you're trading a market maker model, you're usually trading the right half of the curve. So you're a reversal trader, right? You're looking for it to reverse. You need that displacement, that rejection from the higher time frame before you're dropping down. Dropping down beforehand, you're gambling. And so turtle soup, a lot of people will take that as soon as it gets into that high, they'll short it there. And then you see these monstrous trades. Well, what was your entry? Well, it was turtle soup. That's a good excuse, but what did you really use it for? Oh, I just gambled. Yeah, 100% hindsight turtle super. Now I was telling Mason before that I'm not ready to go over this model, but the model that I've been working on, I need a back test. I'm gonna live trade it next week. I need to back test a lot more, but I've been noticing some amazing turtle soup entries that have other confluences other than, oh, there's just a swing low that it took out. Okay, there's a lot of other things that boxes to check, and when those all line up and you take that entry, and it's not time specific. There was one the other day that was like in between London and 8:30 a.m. So whatever that downtime is right there, there's a perfect entry right there, and it worked out amazing. So I'm working on that, and I'm trying to find. I'm developing that because it works out really well. So I'm going to take one of my Apex accounts that I haven't started trading yet. I'm going to take that, and I'm just going to use that just trade that model, see how it works. But if it does come out, I'll be sharing how to trade that model because it is turtle soup. I like to be in. I've been noticing I like to trade in the morning from 7. I usually get to my charts about 7:30, so or Central Time, so it's 8:30 New York time. So try to be there about 7:30, and then I like to be done by 11 our time. So by noon Eastern time, I want to be done. That's what I don't want to be on the charts longer than that. If I come back, it'll be the PM Silver Bullet just to see what's going on. But I don't want to be in longer. Yes. There's I'm still learning how to trade the open. The open's really volatile, and I don't like. There's been some this week that it just spiked up 20 points. You're like, nope, I'd have been wrong on that one and lost my shirt. So yeah, yep. If I take a trade before the open, like okay, so those 8:30 embargoes gets lifted, right? So 9:30 is the New York Stock Exchange, the open. So that hour there, 8:30 sometimes is nothing happens. Sometimes it's volatile. But from 8:30, if I'm taking a trade then around that time and I'm in a trade and 9:30 is approaching, my if I'm not in profit, I'm reducing my risk. If I'm in profit, I'm raising my stop loss really high. I'm trying to give it a little bit of room for breathe, but I don't want that that sharp spike to take me out and lose my ass. So I, I'll reduce my risk or get out of the trade. One of the two. I usually don't like the whole open thing, especially if there's news right at 9:30. Forget that. I ain't doing it. Oh yeah, he's a fraud anyway. That's because he was called as a fraud because he was a fraud. Um, yeah, no. He's like, the morning chew just worked out great. Yeah, what about yesterday's? Oh no. Look, all models fail. Don't let anyone tell you all models fail. Every model fails. ICT says all models fail, right? But yeah, it was more for clickbait. But
So would you think with the where we're at on the like on ES and with NQ as we're going into this week, to me, I'm starting to lean bearish because of this model that we just finished.
I think let's see. I'm gonna remove all my crap off my chart here.
Because for me on in or I'm sorry on ES, we're coming into
Oh, let me go to ES
just
here.
tapped into a bearish one daily fair value gap that had not been tested since August.
Yeah,
I'm sorry. I'm just looking at the 1 hour and then I'll share mine too. So on the 1 hour, we just took out buy side liquidity yesterday that had been resting since September, and we were just 5 handles away of hitting another buy side liquidity that's back from August, and we're into a bearish one daily fair value gap after creating this huge V up.
I think it'll go up to that the consequent encroachment of that daily fair value gap, and I want to see the reaction from that.
Right.
If it goes there and immediately rejects, I'm bearish.
Mm-hmm.
If it goes just blows right past it, we might be taking out more highs.
Yeah. Well, then actually we'd be taking out all time highs
Yeah.
more than likely.
So to me, we're really close there. Like I would expect to be bearish, but I need to see what happens at consequent. If it does, we ideally, right? If we're bearish, we don't want it to hit consequent encroachment. Definitely not close above it, right?
Right.
So you're in that first quarter of that fair value gap. So if you broke that into quarters or whatever, you're in that first quarter of it. So like if it goes into the halfway point, I need to see the yeah, there you go. I want to see what's going to happen at that line. If it just starts, it could not hit it and just drop. I'm fine with that. For bearish, but I want to see if there's any kind of reaction at that line. Cardinal P. I am getting into quarterly theory, but I haven't dug enough into it. And power of three, how power of three works, I don't know. I think power of three and quarterly theory are kind of two separate things in my AMD. Power of three is different. Oh, no, I'm talking about if you broke that fair value gap into quarters, like the 25% level, the 50% level, the 75% level, you're, yeah, right now you're at probably about that 25% part of that leg, guessing. Pretty close.
Pretty close to it.
Yeah. So I just want to see how that reaction is at the midway, at the consequent encroachment. That's kind of where I'm at with the S at the moment. NQ I think is probably probably going to be similar. Yeah, I was on that live when he did that. I'm in that group. Yeah. Very interesting, very cherry picked. And the guy shows live trades like really well, and I mean I don't believe he trades 50 contracts on ES, or one time he showed 75 contracts. That's demo all day long. Um, yeah, I'm like, good luck with that. Most people would not be um, so casual as it went down. 5 handles on 75 contracts as a pullback, but I want to. I mean, I'm not saying it doesn't work. I got to do more uh, investigation on it. I just think when he was showing that, I was on that live and I was like, wow, this is cherry picked. What about that one? 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 And it wasn't the examples that they showed. And so maybe it was one of those where, hey, if it doesn't line up, it's just not one that you care about. Cool, awesome. But how do you know that? You're trading live. Hindsight's one thing. How do you know that trading live? Yeah, TAPTA. You can look at it from. And he was on the 90-minute chart. Who the hell trades the 90-minute chart? I'm not. I'm not waiting. I'm not waiting 50 days for a trade. Screw that. That'd be my rule with that. Uh, okay, so I'm going to tell you how this live stream really went. Okay, their market maker model is what they're teaching everyone or showing explaining everyone in that group, TOTK group, the ones that know group. I'm in that group. Bought into that way back in March, and it's on the Discord. I never really go in there very much, and went through a couple of lives. I'm like, that's interesting, and they had this one on time. I'm like, okay, well, you're gonna share something. Let's look at this. We went on this live stream. There's like 120 people on this live stream. They start talking, and where you see it on Twitter, how it's a 15-minute or 15-minute video. He's talking, and he's like, and so what do you think? Is this made up or whatever he says to end? And he and the other the two admins that were on there, they got off Discord, like ended the stream. So everyone's sitting there like, what happened? Like, oh my gosh, did the FBI take him out? I'm like, you guys are pathetic. You're absolutely pathetic. Give me a break. Yep, they're gonna come in because this guy that has 120 people, he told them what is so cherry picked anybody could see, and FBI took him out. Come on. Yeah, whatever. Good luck. Yeah, it's interesting. It does line up really well on the 90-minute chart, but let's think about that for a second. Every candle is 90 minutes. So it has to hit that range within 90 minutes. Okay, who trades the 90-minute chart? Whatever. I was just like, okay, wasted my hour here. um, yeah, you gotta be careful in some groups. Like I appreciate people saying thank you and everything. That's great. And when I'm in these groups, I appreciate them sharing and everything, but I'm not gonna kiss their ass on their stuff. But in the chat of that stream, it was a lot of this is so amazing. Oh my god, this works out so great. I'm thinking, do you see the chart? How many times it didn't work? And they're not showing you those. I get that it's working here. I mean, I can draw a line on any chart blindfolded. I can put a line on a horizontal array on the chart, and I can guarantee you within about 5 minutes, I can go through the 1 minute chart and find dozens of places that it was respected and retraced and reversed from it. So, does that mean I picked a perfect spot? No. Cherry picked a line on a chart. So just be careful what you see. Back test, even stuff that comes out of my mouth. Back test it, and you'll see it for yourself. That's it. We're not trying to tell you how to trade. We're not trying to show you how to trade. This is our view of what we're learning. If you learn it differently, that doesn't mean you're right and we're wrong, or we're right and you're wrong. It's how you trade the concept, how you understand it, and formulate your own trading plan for you. Okay, I want to be upfront and honest about that. Anyone else have any questions? And I think it is TAPTA. I think is what they named it, which was the name. Yeah, it's time and price. I don't know.
Time and price delivery.
Yeah, algorithm. I think it was
Yeah.
what they're calling it. Whatever. All right, next week's uh video 4, and I'll try and grab some more PDFs that of the other groups if they don't cover the deviations and things that I can share. I don't like sharing too much things that I get from other groups that are paid groups, and I don't want to share too much. But I want to. I'll grab whatever I can. Yes, I do like trading you replay for backtesting, but I don't like doing forward. Okay, so there's backtesting and forward testing. True backtest Jess will tell you, is going back in old data and marking up charts to show that your model works. To build a database of picture perfect trade setups, right? To show that your model, hey, I see it happens all the time. I see it all the time in this hours. I've collected the data. That's backtesting. Forward testing is what you're doing like on FX replay, where you're playing candle by candle and you're placing a buy order or sell order, and you're seeing it play out and see if you won or lost, that kind of thing. Yeah, if you can catch it live, you can see it happen live because they're completely different. Oh yeah, well you first, and I agree with her on that. You first have to backtest it enough to know that you're smart, to have the confidence that your model is going to work enough, right? That it happens all the time, that you see it all the time, that you know it. You got to build that confidence, otherwise you're just taking someone's word for it. Look, I like ICT. I think he's great, but I'm gonna backtest this shit first. Uh, Next week we'll be here at 10. I'm gonna watch video 4. I don't know how long it is. Let's see how long it is. It's 29. It's almost 30 minutes. Hold on. I had it. Oh, I just had it. I'll grab it. Hold on. Inner Circle Trader, playlists, market maker model. I think that's the one we're on now. All right, that's it. Oh, nice.
Have a great weekend, folks. Enjoy it with your
Yeah.
families.
Have a good one, guys. Take care.